Wanna see all my friends at once. You know how we do. 502 past the curfew. In Shibuya, eating udon is what we into. Laughing out loud, time always miss you. I wanna see all my friends at once. I wanna see all my friends at once. Like a blaze in the distance, I can see you. What's missing? Oh, if you carry me out the system, and just look at me for who I am. I wanna see all my friends at once. I wanna see all my friends at once. At once.
Check 1, 2. Can you guys hear me okay? If you can hear me, raise your hand. Nice. Let's get started here in about 2 minutes, guys. Take your time finishing that pizza, wrapping up the conversations, and let's have some fun. So I just got this new clicker, and I didn't know that you could do, I'm lying, maybe not, maybe yes. Sorry, I know the suspense is killing you guys. There we go. Did you guys know you could do this now? Yeah? I need to get out of the house more. But thank you guys so much for coming. This is going to be an awesome event. It's going to be very low-key. We're going to start with the panel. We have some great folks joining us today. I'm going to allow them to fill you guys in on what they do, how they do it. Super grateful for having you guys here. Their experience to me is what I've been looking for in the VC industry. And to me, it's a bit of a different angle, right? It's exactly what it says, from builders to backers. So these folks have just very unique experiences doing like real things in companies, which is what I've done, which is what I love to do. And being interested in venture capital, maybe getting a little bit deeper into it than I have before. Honestly, it's a privilege to have you guys here and just dig into your brains and just have a great conversation. So we're going to keep it kind of like an open panel, but considering this is pretty intimate, like let's all chime in, right? If you guys like want to double click on something, let's all get good information, good value out of all of this. So don't be afraid to raise your hand, speak up. Hopefully you guys don't mind because I'm kind of winging it now. I gave them some pre-read on what we were going to do, but we adapt like we do in tech and startups, right? Awesome. Well, thank you guys for being here. A little bit about me. My name is Arturo Piña. I've been in Austin for about 11 years or so. I used to play rock and roll, which is probably why I still wear the skinniest jeans you guys have ever seen on stage. But realized that wasn't really for me, got into startups in my early 20s, and have had a pretty good run doing things from pre-seed through Series C. Got to see 2 companies in different sectors grow to be pretty big with $330 million worth of exits. And over the last 2 years or so, I've been doing a bit of fractional work, kind of figuring out like who I am, what I want to do next, socializing a lot here, especially at Capital Factory, but just meeting a lot of great people to figure out, what the next phase for me looks like. And I mean, that's pretty much it. I'm not going to bore you guys too much because this isn't about me. Let's get into some intros. We have Eric. We have some mics here. Why don't you just give us a quick, 30, 90 seconds about who you are and what do you do now?
Does this work? All right, great. Yeah, hi everyone, I'm Eric. That is my last name, engineer. I am a partner at S3 Ventures. We've been in the market for 20 years. It's actually our 20-year anniversary this year. Really proud of that. We are seed, Series A, and Series B investors, primarily in B2B software, but we also do a little bit of healthcare investing, including some med device. Yeah, we've been around for a long time. I joined the firm, though, about 7 years ago. Prior to that, I was CEO of a portfolio company called Invoto that we grew to about 12 million in revenue, about 100 employees, actually all in the office across the street, right here from Capital Factory. We had 2 floors there. It was a great experience, and after we had that exit, I was kindly invited by my partners to join the firm. Prior to that, I worked at Microsoft in product management, and on the very early mobile devices, like the Pocket PC and the first Windows smartphones.
Nice.
I was in charge of developer tools, so trying to get people to write apps for those devices. And before that, I was here in Austin at Trilogy Software, which we were talking about, which was a kind of a fast-growing startup during the dot-com bubble here.
Good stuff. Thank you, Eric. Let's see my quick round of applause. Thank you for being here. We're now slowing down. Catherine Moore, welcome.
Thank you. Oh,
There we go.
does that work?
Maybe, yes, no?
Hello?
No? Switch to that one real quick.
Better?
Yes.
Okay, awesome. Hi, Catherine Moore. I am at Live Oak Ventures. We are an early stage fund here in Austin, investing in Texas-based entrepreneurs building businesses in tech and tech-enabled services. We'll invest from pre-seed through Series B, but really seed and Series A is our wheelhouse. I am the newest member of the team over at Live Oak. Joined a little under a year ago, so a lot of my perspective on VC is newer. It's not quite as experienced as these guys, but my background is on the startup side. The first company that I joined out of undergrad, it was a very early stage startup called TopTal. They run a network for freelance software engineers, and at the time they had raised a small pre-seed round from Andreessen. We're looking to bring on first non-engineering hire to do everything that didn't make sense for the developers to do, and that was me. I think my official role was go-to-market strategy, but I really did everything that was not engineering. So it was a great learning experience, and from there I went to a cybersecurity company called Darktrace. They had just raised a Series C round, and we're looking to scale up their operations in the US, and actually joined on the ground as an account executive there. Had seen the technology and just thought it was incredibly cool and said, okay, I want to join this company in whatever capacity possible, and that was sales, and had the opportunity to step into basically every sales role up to VP of sales from there, and was there through our first year as a public company. So two very different experiences, both in terms of stage and kind of company trajectory, and then, hopped over to the VC side from there.
Amazing. So happy you're here. Let's give her a quick round of applause. Thank you so much. And then last but not least, Nick.
Awesome. Thank you. Excited to be here. Thanks for having me. Nick Tipman. I'm the founder and GP at Tip Top Ventures. We're a new pre-seed and seed stage vertical SaaS and vertical AI specific fund. Leveraging my background as founding CMO of a vertical software company called Greenlight Guru. And we're building an LP collective of other vertical founders, execs, and VCs who have had success as well. We write smaller collaborative checks alongside leading firms like these guys, 100 to 400K, just early stage as well. Also a bit of a startup. We're a fund one. Just announced the fund last week on Thursday, so excited to make it official.
Yeah.
Thank you. Appreciate it.
Huge milestone.
Big deal. Excited. Good milestones. Got to celebrate them along the way. It's a long journey. Prior to starting TipTop, though, was founding head of marketing, CMO of a software company called Greenlight Guru. We were a quality and regulatory compliance software for the medtech industry. Help med device companies get approved by the FDA, the EU, and then keep their device compliant once they got to market. We had a great run there. Similar, I joined pre-product, pre-revenue, founding team, wore many hats over my almost 9-year run there. We bootstrapped the company to just over 15 million in ARR, and then raised 120 million from private equity. Then stayed on with the company for 2 years post-transaction. Got to do some fun stuff after that. Led product interimly for a year, led strategy and corporate development, and then transitioned out when we were just under 35 million in ARR, about 225 employees. It was just me and the founder CEO left at that point. Consolidated sales, marketing, and CS under a CRO, helped hire that individual and transition out. And then before Greenlight Guru, studied entrepreneurship and marketing at Indiana University. Helped start 3 companies after college that I look back with fond memories as great learning experiences that didn't reach their full potential. But got into an accelerator with one, raised a seed round with another, and bootstrapped a media company to a very modest exit with the third.
Amazing. So as you can tell, there's a very strategic panel, right? We have folks from different walks of lives, different time in VC. And that was by design, right? Nothing's an accident, at least not when I'm running the show. So that we can get really like different views and different experiences and opinions. Let's just dig in. I'm excited. Cool. Well, I said we're going to have it interactive. Any questions so far? Anybody want to chime something in? Something that stood out? You guys with me? Is the pizza kicking in? You're getting a little tired? I should have brought some Cokes or like Diet Cokes or something like that. I knew I should have. All right, let's dig in. Cool. I'm just going to start like throwing some questions out to you guys. I might single a couple of you. You might be ready for it. You might not be. But feel free to chime in. I want to get everybody's point of view. And really, let's just start from like the first one, right? When did you realize your operator experience could translate into being a great investor? When was that to me, it's a shower moment. When I get out of the shower, it's like when all my great ideas come to mind. When was that shower moment for you? Nick?
All right, I'll kick it off here. I kind of have two moments. I'll go with the second. The first, I actually realized that I wanted to get into venture long term back my senior year of college when I happened to find this whole tech startup VC venture world and knew that this is what I wanted to do with my career. But the time that I think it really clicked for me that my operating experience would do well in venture and translate well was actually when I started leading corporate development and strategy at Greenlight Guru and more doing the job of a growth stage investor. After we went through the process, we hired a banker. We talked to 9 PE firms. We said no. It was a big process. We came back and chatted with 2 of them, and it was just a great learning experience and a full year or so going through that process. And then when they came on board, part of the strategy that we had pitched was the vertical SaaS strategy of building a tool, expand into a platform, create a category. And so we built the tool, we moved to a platform, and we were going to expand across the value chain. And when it really clicked for me when they were excited as we were about that strategy, and then being able to actually execute on that strategy, and was able to line up 4 or 5 acquisition target areas, put targets in each of them, and then ended up executing on the first one of those, which was a low 8-figure deal that we did out of Denmark that I was fortunate enough to be able to source, strategize, negotiate, and then spend time over in Denmark integrating, and kind of got to see the full thing from ideation to targeting to outreach to negotiation to integrating there in Denmark, and kind of going through that full cycle and seeing it from both sides of the table. I realized that I got some chops that could be valuable in doing this as an investor, and the operating experience that would be helpful to the founders on the other side as well.
Yeah, for sure. It wasn't theoretical, right? You got to see it, you got to do it, you got to see it all the way through. That's very cool. This is opening it up for anybody else. Like, what do you guys think that like operators might see that a traditional, maybe more finance background person or VC might not?
I think how hard it is, fundamentally. Like, I've been in a lot of board meetings where it's very clear there's some people who have never operated anything, and they can still be amazing board members. They can be amazing investors. And in fact, there's pros and cons to being an operator as an investor. We can talk about the flip side as well. Mm-hmm. But on the pro side, I'd say it's like really understanding that it's like one thing is to have a strategy, it's another thing to actually execute it, and all the little things that you have to do, especially the people part of the job, and just the messiness of it, and that it's not, you can't just like wave a magic wand and it's going to happen, right? It's just how hard it is, and then also the toll it takes on founders mentally. I got shingles when I was a CEO. So stressed.
Wow.
Because pretty much every person who's running a business probably goes through this at some point, which is like you literally have those weeks where you don't know if you're gonna make payroll, all this other stuff. You're like, counting the dollars in the bank every week and stuff like that. And so those periods are really, really hard. And so I think that kind of empathy or understanding, and then also just appreciation of what it really takes, and when someone misses a quarter, how you handle it, are things that are important to kind of being able to kind of keep everyone aligned and excited and positive and get to outcomes you want, versus being you still have to kind of ask the hard questions, make the hard choices, fire people. You have to do all that stuff. I'm not saying you don't do that, but how you do it,
Yeah.
I think is something that I had an appreciation for earlier than because of my operating experience.
No doubt. It's almost like just the human touch of this whole thing, right? Of just
Yeah.
tech and businesses and entrepreneurship. It's a hard
Yeah.
battle, right? What do you got, Mario? So yeah, what do you got?
So in a VC portfolio, you're making 12 investments, 19 investments in that fund. When those companies, so you're aiming on 1 to 3 of them to be your cash cow, right? How do you manage the ones that are failing, and when do you call that they actually fail?
It's the hardest part about venture, and it's even harder when you have partners who see it differently than you do, right? And so, I mean, there's a lot of philosophies behind this, right? Some people will be like, your winners when you see it. You should spend all your time there and be like completely objective and just move on, right? And then there's others that, because there were a lot of great examples of companies that went this way and that way and then eventually took off, 10 years later or something like that. So I don't know if there's a right answer, but I think it's important. It's kind of one of those things where you have to balance this kind of emotion and the, as you work with founders longer, and especially if you're a former operator, you feel like emotionally invested in a big way. And it's like children. Like I always say, like the way I knew what love was when all the sacrifice I put into the newborn, and the sleepless nights. Only you feel that's a different kind of love. And I'm sure that's how founders feel about their startups a little bit. And so I think you can start to feel that way about your investments too when you spend a lot of time. And so you almost have to sometimes try to balance that with just some objective truths. And that's where partners can be helpful also, where it's like, hey, am I missing something here? Like, I know this is not working, but it's right around the corner, and this is why I believe it. Does that make sense to you? And so I wouldn't say there's like a science to it or anything like that, but it is a human experience where you're trying to get as much information and try to balance your emotions and facts.
Yeah. I mean, I've been spending a lot of time in researching, the VC financial model. You threw out some numbers in there that are like really expected, right, out of a fund. And some of it is science, but correct me if I'm wrong. These are the experts. I'm just here blabbing away. But not a lot of it's not a lot of science. Like there's financial things that we need to look at. There's metrics and things that we expect and returns that we need to hit. But a lot of what you just covered is very much an art, right? It's a great segue into my next. Let's do one more, and then because I do want to get Catherine's point of view on something that is fresh, top of mind.
Failures are always kind of a more interesting thing to me. In your experience, the ones that failed, was it a failure of leadership, or was it a failure of product market fit? Was it what was the underlying thing that kind of drove the ones that?
I mean, it's all. I mean, it can be any of those. Frankly, I mean,
Is there a
you see.
percentage?
Oh, I don't.
Is it mostly product market fit, or? Just curious.
Yeah, maybe it's matters by stage. I mean, I wouldn't say that. I mean, I don't know, and we all make our different kinds of mistakes as investors, right? So some people might over-index to being poor selectors of founders. Others might over-index to just not understanding what are the real signals around product market fit, and like you said, stage can matter too. So I don't know. I think it's all of the above. That's what makes it a really hard business. The other thing about venture is it sounds sexier than it is. It's a lot of hard work, and and you're spending most of your time with the things that are difficult, and whether it's saying no or telling people that there's no more cash for your dream, I'm sorry.
Yeah.
Things like that, really hard emotional conversations.
Yeah. That's as I mentioned. I think that's a great segue, Catherine. This was going to be for you. We kind of get into when you make these calls, how do you do it? Obviously, the number one thing is we write checks, but then what is value, beyond capital, especially with this sort of operator experience that you have?
Yeah, I mean, I think Eric touched on it really well. It's the understanding of what it is that founders are going through. I think for me, just seeing on the sales side, have seen firsthand just how sales strategy and priorities shift as you're going through different stages of a startup. So from the earliest stage, kind of founder-led sales, where you are the person who's selling your employees on your potential employees on your company, your potential customers on your company, your investors on your company, And it's kind of just the like gritty, scrappy stage of we're trying to get every contract we can through the door versus some of the post-IPO later or even preparing for IPO stages of sales where it's like, all right, we need to be smarter about how we're structuring our contracts and who our partners are and some of those kind of bigger strategic decisions. That's just one very specific example of just how what you focus on as a company changes over time. And I think that's something that is helpful to experience firsthand so you can understand what the founders you're working with are going through.
Yeah, I kind of want to flip that around too, which is how do you make sure you don't overstep or do, I don't know if this is the right way of saying it, right? Like it's not doing too much, but at the same time, like you have a portfolio, you have a bunch of companies, like you can't give it all your energy all the time. So what is like, how do you avoid overstepping and then essentially doing the work of, GTM lead or something like that?
Yeah, I would actually be really interested to hear y'all's opinion because that's a conversation that I've had with a couple of the founders at the firm. I think when you come from the operator background, it's this, you're used to doing and you see something that needs to be done and you want to jump in and just do it. But at the same time, we're investors in the businesses. We're not building the businesses ourselves. So that's definitely been a learning experience for me is, you want to be there to support your founders and jump in and help where you can. But at the end of the day, you are in a support function and not an actual do function, which is very different from
Yeah,
the
that was what I was
operator side.
alluding to on the other side, like
Yeah.
where it can be dangerous and make you maybe a worse investor. Also, is that tendency where you feel like, oh well, this person's like 80, like even as this founder selection thing, like oh well, yeah, they're not perfect or whatever, but and no one is, right? No one's ever a perfect founder, but like okay, like sometimes you might be willing to see past those shortcomings, whether it's in their strategy or the team or something like that, because I also feel like as operators, especially if you did early stage stuff, you're just optimistic and you kind of see like how this could work.
Right.
And you kind of are not as objective about why it hasn't been working for this long. And that's where my partners who are not all operators, some half are and half aren't. The ones that aren't tend to be a lot more cold almost about how they approach it, and actually that's a good thing. I think you need both. That's why I think our team is great in that way because we have that balance. And it's also like hiring. Like so, the flip of that is, if you're a good CEO, you're hiring your VP. You want to hire a person that's smarter than you in that position and that you don't have to be looking after. So you can kind of draw on that as an operator. I think as an investor, is just make sure the CEOs are the kind of people that that won't. That you can fill in gaps and be supportive of, but they're not going to have like such clear gaps that you're going to have to like actively fill on day one.
Yeah. Or maybe even the opposite of that, right? Which is like not willing to, like you just alluded to, right? Like doing the right hiring to fill the right gaps, but then like not being able to let go or willing to let go.
Yeah, and not everyone's going to get. I mean, there's not every founder is going to get to like an IPO clearly, but I made the mistake of early on, I think, saying, oh, well, this person can clearly, they'll get us $1 million or $2 million and then we'll figure it out. The problem is you can't hire a good CEO or $1 million or $2 million company. That's not a good time to like do that. And the founder may not want to do that, obviously. But even if the founder is telling you up front that they're not the person, that still can, I've had mixed results with that.
Yeah.
Like I think as I've been in it longer, it's more like, no, I'm going to only back the people that I think can get us to maybe at least to 10.
For sure. Let's switch it up a little bit. I really appreciate that. I think it's important to keep that founder empathy in our like DNAs, like whether you're in the industry or just operating. We're all humans, right? Let's all support each other. Yeah, okay.
I'll chime in here real quick. I just want to, I like to think of it, having not been the CEO for the last 9 years of my operating career, it feels very much like being a supportive executive and to think of yourself like an executive team member. And like my role for almost a decade was to be the CEO's right-hand man and to be there, even though we did have a COO, and so maybe the right hand of those two that were running it. But I just thought to myself, it's like, how can you be the most supportive person possible without overstepping your role or overstepping your bounds? And so ultimately, at the end of the day, the decision lived with him, not myself. But I cared deeply and was deeply opinionated and paid to be deeply opinionated about it. And so the same kind of tactics and strategies that you would use to influence company strategy and to get the company to go your way, I think is actually a very useful skill and feels very natural and similar in working with our port co-founders as well.
Yeah, for sure. Well said. Let's get into some trends, tech, and what's next. I'm sure we all have one thing that we're all thinking about immediately. AI, we all talk about it every day, but I want to get a little bit deeper into that. Like Nick, you're very focused on this vertical component, great portfolio. You've seen some great success through like all the way through IPO. So we know it's AI. It could be other things, but like let's get a little bit deeper into that. Any macro trends that you're seeing like increasing? Can we tie it back to this operator sort of mindset that we're talking about? Like, let's just kind of open it up to kind of what you're seeing as the next trend.
Can we say AI?
Yeah, but let's get into some examples, right? Like what?
Yeah. I mean, this is my thesis, and not to just pitch my own book, if you will, but I really think like well, I guess you're asking macro, but if you're going deeper into AI, I think the opportunity for founders is really at the application layer, and it's going deep into domains where you need deep domain experience, and there's complex workflows, and there's uniqueness to what's going on in that industry. And I think that's where we're going to see the greatest opportunity. I think the large horizontal plays have largely been taken by the SaaS companies and or the incumbents, which are the LLMs or AI foundational models themselves. I also believe, I mean, this is up for debate, and it's not an area that I play a ton, so I'd be interested. Maybe these guys have differing opinions, but also at the infrastructure layer, there's a lot of opportunity today, but as you progress from the AI models to the infrastructure layer to the application layer, it seems like that's probably the next layer that you're going to see the large language models start to go after and commoditize. And so for many of the reasons, that's why we're focused on at the application layer and specifically on vertical companies.
So it's always interesting to kind of hear about AI and like the hype of AI to me, because it's something that I feel like I've been hearing since I joined Darktrace in 2017. And obviously there are different flavors to AI. And back in 2017, what we were working with was more of the unsupervised machine learning and the deep networks and things like that. And today, when people talk about AI and whether it's hyped or overhyped or not hyped enough, it's the agentic AI. But it's just kind of interesting to me. I do think there's just always going to be a new wave of technology that gets applied in really interesting ways. But tying it back into, the operator versus the investor role, something that, while I was at Darktrace firsthand, we were having to have all of these conversations about what AI is and why you need to use it for cybersecurity and why it's not overhyped, and just kind of being in that position of being a category creator is very interesting. And we see, portfolio companies that are doing that all the time. And it's, companies that are applying this new technology in really novel ways, that they're creating a whole new category. And there is more work that goes into that when you are running a business, and you have to explain that to, everybody that you work with. But it's a challenge, but it also means, I think, you have an unlock for an incredible opportunity to really create that category and be huge in it.
Yeah.
Yeah, I mean, so I alluded to one of my early jobs was I was the product manager for the developer tools for the very first kind of mobile devices. So like the Pocket PC, which was like a Palm Pilot, competitor, and the early Windows smartphones. Before there was GPS, there were no app stores, there was no Wi-Fi
Stylus.
on these devices. Some had styluses, yeah, and you had to plug it into your laptop to like do any data transfer, right? So super early. But when you think about that mobile wave, this kind of reminds me of that in I think that and obviously like the cloud wave, but mobile in particular because it just there was clear like two groups. There was things you could do where you could take desktop experiences and create the mobile experience, and I liken that to like adding AI features to existing SaaS products, and there's a lot of opportunity in that. And then there were like these mobile native, only on mobile possible things. You know, people talk about Uber, but there's a bunch of other things like that that took advantage of the fact that there was GPS, that took advantage of the fact that you weren't in front of your desk, you know, all that stuff. And so that's the AI native, the new things that are happening. And so it's like any other big platform shift. It opens up everything. It opens up opportunities for incumbents to get disrupted. And so it's exciting as an investor because those waves are what really drive that next generation of companies. And so, when you go beyond that to the AGI stuff and all that stuff, that's a whole other, I don't know if mobile ever had that component to it, so I can't really comment on that. But as an investor, just thinking about B2B software in particular, but also even in consumer, like I suspect ChatGPT is an example of a new consumer product, right? But there's going to be a bunch of other new things on the consumer side too that will, I'm sure, be unveiled soon enough.
This next segment is called Overhyped or Underhyped, and I want to get you guys involved. So if you need to get up and stretch, that's cool too. But let's just start throwing some stuff out, and then let's just get some like quick fire reactions on overhyped, underhyped. Just somebody throw something out. What did you read about today? What's on the news? You guys don't know any technologies? Deep research, like the ChatGPT? Overhyped or underhyped?
I know our associates use it every day.
I would have said probably under, yeah.
Underhyped?
I feel like accurately hyped.
Accurately? Okay, cool. So I feel like we're kind of in between. Honestly, I'm a big fan. I'm going to go under. I used to feel the stupidest things. Well, actually, my dog recently got injured, and it helped a lot because the vet was like, he needs an MRI and like surgery on his back, and we should do that now, and it's like $12,000. And I was like, it's Sunday, 4 a.m. Like, are you sure? Like, we went to the second vet on Tuesday after I read the ChatGPT. Maybe I shouldn't trust ChatGPT with my dog's health. But the real vet was like, oh, he's doing pretty good. Just rest, for 6 weeks, and now he's killing it. So, a little bit of deep research that took 14 minutes probably saved me just a little bit of change. So, I'm a fan. I'm gonna go underhyped. What else we got?
How about the effect of AI on workforce?
The effect of AI on the workforce. Catherine, over or under?
Underhyped.
Under. Nick?
I would probably say under as well, but to use Eric's version of history, I think history would tell us that we have these technology waves and that people find productive things to do, and so we shouldn't be as worried as maybe we should. But my lived firsthand experience right now is underhyped.
Yeah, I'm more overhyped. In the sense of, if you mean like it's going to destroy jobs, is that what you mean by that?
How many jobs
Yeah,
does it
yeah.
destroy versus
I think it's going to be awesome and it's going to be really good.
Yeah.
I think it will change jobs
It'll change,
more so
yeah,
than it will
yeah.
destroy
sure.
jobs.
Yeah. Maybe there'll be dislocations, but like every other.
which jobs in the short term are most vulnerable?
We talked about this last night. I think engineers. Like I'm not an engineer, so some people probably have a lot stronger opinions on this. I wouldn't say it, but it was actually in the context of junior engineers coming into the workforce. And I was talking to a very experienced founding CTO many times, like the AI or junior engineers, it's the same thing. I prompt them both the same way. And so I was able to do 14,000 lines of code over the weekend and get this really hard integration done with one person, which would have taken me 3 to 4 weeks in a team of 10. And he just explained that story last night. I have a similar story, I would say marketing, creative, product marketing, messaging, positioning. I have a similar story when I first put together the product marketing work for Tip Top Ventures. If I would have done that with my team from Greenlight Guru, it would have been 3 to 4 weeks and probably a month's worth of work. And it happened in 8 hours of going back and forth with ChatGPT, and then another 8 to 12 of like going through everything that it spit out. So yeah.
On the engineering side, I've had 2 companies now. The two companies in 2 days, our board meetings basically make the case that they are going to not hire any more junior engineers.
I think Salesforce is announced it.
Yeah.
They're no longer hiring kind of, at least entry-level
Yeah.
jobs.
I'm a huge fan of this topic because, I mean, you guys, one of you, I can't recall who just said it, but it's about adapting to what's happening, right? I think, and it's going to happen very quickly. In my opinion, I think I've been working a lot with UT students here at Capital Factory over the last 14 weeks. And we had a similar conversation. They were very concerned, like, I can't get a job. And I'm like, look, get on these platforms. Go build something, because now you can actually do that very quickly. Go deploy, go learn something, show me a project, and I'll probably give you a job, right? So I think we now have the tools to do more than we had before, but it's up to the individual to adapt and be able to show that value and not just like, hello, it's my first day. How do I connect to AWS or whatever?
There was a second part to my point there, which was interesting, which is they both said that, but they are also in the same breath saying, we can't find those senior people. So I don't know what the answer is there, but so in theory, yes, right? But in practice, there's only X number of senior engineers out there, and there's probably 10X the need, in every company if that's a strategy, right? And the other thing about software development that I think is interesting, and I don't know if it's true, it's not true in all kinds of work, but I think in software, it's like, when is enough enough? You can always add more. And so, you're going to always want to do more features. You're always going to want to do more for the customer. And so it's like a weird thing where it isn't, where you'll, I can see certain types of work where, there's only a fixed amount, and I can, instead of hiring 10 people, I can hire one person, and that's easy. But engineering is a weird one. I haven't figured that one out yet completely.
You on the marketing side,
I-
sales side,
But sales is probably less. Marketing, copywriting, creative. I was going to say legal is the other one that we talked about last night. That's definitely, and I mean that's where you get 10x legal assistants, 10x engineers, 10x marketing ops. I mean there's this new role, go-to-market engineer, which is kind of like go-to-market strategy, rev ops combined, understand data, put things together. But outside of that, we also talked about though. Support job, like lower level support jobs, and potentially like driving jobs. Truck driver, like we were saying, I think it was someone said last night, Tesla's planning on launching their self-driving or driverless cars here in Austin in like a month or something. And so that's where more of this displacement may come in, and we may get maybe a little more rougher change. But yeah.
Yeah, I mean, one of our investments recently is a agent for doing the investigations on security alerts, right? So if these security systems are constantly saying, oh, there's this alert that came out, and there's this new patch that has come out, and what are all the vulnerabilities? And someone has to go do all that investigating, and then come up with a report, and then a remediation plan. Those are junior and maybe even middle level security specialists that are doing that, and the idea is that agents can do a good chunk of that.
I'll weigh in quickly on the sales side too. I think it a little bit depends on what your sales motion is. Do I think AI is going to replace big enterprise sales? No, not in this decade, maybe not in the next ever. But there is definitely a lot of automation that you can use AI for, no matter what your function is, and everybody can use AI to be more efficient, which is something that's really cool.
Yeah, I know several of you in the room, and there's a specific person here who's doing Big Sister. It's a sales enablement AI tool. You're being live streamed too, so he didn't pay me for this, by the way. Good conversation to have after the event. I'll take commission on any sales from this. I want to switch gears just a little bit. I want to talk about your first checks. And like, what has changed? What have you learned from like that first one? I'm sure it was nerve-wracking to like where you are now. Catherine, you want to kick us off?
I can start. Mine was very recent. The first deal I was on, start to finish, with Live Oak is a company called Degree Analytics, and I had mentioned earlier about founders that are kind of creating a new space. This is definitely one. super interesting guy. Actually, worked at a capital factory for a little bit. They're an early investor as well, but he is using Wi-Fi data to do analytics on how college campuses are using their space and making it more efficient. And you hear about everything happening in higher ed right now, and you would think it would be headwinds, but it's actually a really interesting opportunity for him to go in and talk to all these schools about how they can use budget dollars better and be more efficient and provide more value to their students. So he's been, a great entrepreneur to get to work with and see those first couple of board meetings and really get a sense of what the investor and entrepreneur relationship is like. And I'm very much in a supporting role on that deal, but it was a great kind of first one to be able to continue building foundations on.
Yeah, thanks. Let's see. I'll talk about my first deal at Tip Top rather than Angel deal. I think it's more interesting and to see kind of juxtaposing the differences and comparing and contrasting. My first deal is a company called Project Mark out of Tip Top, intelligent CRM for the construction space. And I'll say it's actually a deal that more or less pulled me into business. At the time, I was doing some angel investing. I also was scouting for the dozen or so funds that I'm a small LP in as well. And when I would see interesting opportunities just to get reps, meet with founders, if it's an interesting opportunity, pass it along to 3 of the top funds that I'm involved in that I think would be a good fit. And that was a motion to get me some reps. But this one was interesting that the founder was like, no, Nick, like that's cool. I know that fund's great. They're great too. They have marketing experience, go to market, but they didn't have your exact experience at Greenlight Guru. We want to work with you. And it was the first time the founder really put the press on me in this motion that I was running over that like 6 or 12 months or so. And I was like, interesting. And I was still in the pre-marketing phase of the fund. And if you know this game from the emerging manager circle, you don't know exactly when your first close is going to come. You got your commitments, but you don't know. And so the founder was taking a bet on me that they really wanted to work with me. It was a closed round. It was oversubscribed. And then I kind of was doing the same thing with the founder of like, hey, we don't have a fund yet. We don't have a website. This is my plan. This is what I'm doing. I'd love to work with you. It's amazing what you guys are doing. And we figured out a way to enable us to come into that round. And then when I did do a first close on the fund 3 months later or so, we wired the rest of that capital. I would say the other lesson or learning coming out of that was just how different doing a deal for the fund versus doing an angel deal was, and the level of diligence. And I almost felt like my thinking didn't change, but I think of it kind of like being back in school and like showing your math a little bit. It's like you got to show your train of thought or your thinking process, and like that's what I realized when I started talking to LPs. Like that's what they really wanted to see. I mean, they thought it's a cool company too, and I could tell the story, but they really wanted to know the journey and the thought process behind it. And so that was one of the lessons learned, just being able to document all of that and institutionalize our process, my decision-making process more, so that I could go back and point to what we were thinking at the time of the investment.
I'm going to double click there real quick. How often do you pull those types of resources from what the founder has pitched you? Whether that be pitch deck, diligence, assets, like whenever you're talking to your LPs in your fund.
Oh, gotcha. When it goes into a memo is probably, I don't know, I could probably argue 60-40 either way, but I would say 60%, probably 65% what the founder shares with you, the diligence, the materials, the data room, and then 35%, 40, so 35 to 50% your own primary research, whether that's third-party deep research, using deep research, which I use a ton and is extremely helpful, or doing reference checks is the other part of it that gets worked into there.
It's a great segue for you, Eric. And just same question, but I also want to expand on it with an angle of like, what do you wish some new investors like thought about or knew, given your track record and your experience, like from when you started and seeing the Texas market evolve, like just give us some wisdom on what you.
I didn't make my first investment until 2 years in. One was maybe a year in, I went into a very competitive situation. I actually tried to co-lead with Venu on something, but actually I learned a lesson of like, as soon as you try to co-lead something, then you have to make both parties work, you know, and that was not what the founder wanted, and so we lost that deal. But so that was a lesson. But it took me 2 years, partially because things like COVID and all these weird disruptions happened, but also I think I was a little bit conscious of the fact that I was an operator, and I really wanted to look for the perfect deal that doesn't exist. And so I had a pretty high bar. And then I think I got some advice from one of my partners, which was essentially, hey, there isn't a perfect deal. Just go for it. Don't worry about it. And so I immediately did 2 in a row, like within a month of each other. So went from one extreme to the other. But the lesson that I learned from that very first one is about really understanding the difference between different types of markets and companies and how long it takes for different companies. And so this investment is a company called QBD Vision here in Austin that is a software platform for the life sciences industry, specifically big pharmaceutical companies, to help them develop their manufacturing processes so they can scale them up. And there's a whole part of drug discovery where you have all the preclinical stuff, like in the laboratory, right, when you're looking for the molecule or whatever, and then there's this thing called CMC, chemistry, manufacturing controls, where you have to actually figure out how am I going to scale that up into production, first for the trials and then for worldwide, in all these different locations, maybe with partners, and all the while doing that in an FDA compliant way. That whole part of pharma was still done in email, spreadsheets, PDFs. There wasn't any structured data, there wasn't anything. So I said, wow, this is perfect. This system of record, it's like basically an ERP for this huge industry. Viva had become a big public company, like the darling of Wall Street, huge multiples. So this is perfect. What I didn't really appreciate, I knew that pharma was slow to digitize, but I just didn't really appreciate how long it takes to build the trust, not only with big enterprises, but specifically in regulated industries, and then also for a system of record. And so that was just something that I just had to learn patience, and also to learn that every market's a little bit different, and the way that you sell into that world is actually very different than you might sell in other industries that I was used to. And so there was just a lot of learnings along the way that I couldn't kind of rinse and repeat what I had, the mental models I had to really think about like first principles for that specific industry, talk to people in that industry, and things that I would have said you would never do, like you would hire your lead salesperson out of Accenture. I'd be like, that's the last person I would hire for SaaS, is actually the right answer, and it's working beautifully. So just things like that are counterintuitive, and always having an open mind about stuff, and that you're learning something new every day, and you can't just rinse and repeat, I should say, from industries. And I know you're trying to do stuff in new industries too, and you're probably seeing that all the time. Yeah.
Well said.
Nice. I'm going to maybe do the last one here on this topic, and then I want to get back to the crowd and do some Q&A. But, you guys have been awesome with your careers and have done awesome things. And I think you've all sort of landed in unique venture firms and spaces, right? So the question specifically is solo GP versus joining a platform versus a syndicate, like rolling into it. There's a bunch of options out there, and I think there's some folks in here I know that invest, that are interested in investing, that are on the founder side, and you might interact with all these different ways of getting, money. Tell me, like, how did you decide? Like, what was that thought process like? Catherine, what do you got?
Yeah, I think for me, a lot of it had to do with where I am in my career. I had obviously seen, 2 startups and different paths and different kind of ways to success, but the investing side was very new to me, and it was one of those things where I feel like I don't know what I don't know, and being able to learn from a group of people in a team setting was something that I really sought out and was looking for, just kind of given the stage of my career and what I was hoping to learn and see. Was really lucky to find that with Live Oak. It's a small team, but a great team. You talked about, balancing out with backgrounds and experiences. It's kind of nice to get all of those perspectives and have that diversity of background and diversity of thought, but also really just get to learn the venture business from people who have been super successful in what they do is all that I could ask for at this stage.
I can really appreciate that even from the founder side, right? Like that thought process and that intention, that you have now as an investor. I think that's super valuable too. Nick, what about you?
Solo or non?
Yeah, like why are you a solo GP? What was the process? Why did you decide?
TBD. We'll see. I'm solo right now. When I was starting the fund, I used to say that I'm more a solo GP by force than by choice. I just didn't have that person in my network that I've worked with for the last 5 to 10 years that's also trying to do this for the next 20 to 30 years. And it's not a decision that I take lightly. That being said, I also, around that same time, started saying, if a win happens in the forest and nobody's there to celebrate it with you, is it even a win? And so I'm a team player at the end of the day and like team sports and miss the camaraderie of winning together and playing for other people. And I like to joke as well, my wife could only be so happy for me when we'd sign a new LP or sign a new deal. She's a sales leader as well, though, and does high velocity sales, so she knows how to keep the energy going. But it's nice to win for others, but as LPs started coming on board and we got more deals, that's gone away a little bit. And I was very lucky and fortunate to be able to bring on our largest outside investor and only independent board member from Greenlight Guru on as where we landed with his title as senior advisor, but I almost think of him like a partner. He's incentivized with carry into the fund as well, and I actually went pretty deep exploring potentially partnering with another GP before doing our first close back in Q2 last year, and ultimately the size of our two funds combined would have pushed us north of 20 to 30, somewhere in there. It would have pushed, they say your fund size is your fund strategy. It is true to some sense. It would have pushed our check sizes up. It would have made us start co-leading deals in Fund 1. We weren't ready for that experience, or we weren't looking to do that. We both wanted to run our Fund 1 strategies. And I was lucky, Bill Loss is his name, my founding advisor. He was my anchor LP at that time too, and he kind of advised me through the whole process, and towards the end kind of leaned in and in so many words had me see if I was really listening and ask him like, hey, are you leaning in here and want to be more involved than just an LP? And he's like, yeah, absolutely. Like, I'm at a different stage in my career, 2-time founder, CEO through exit, 10-year angel career that he's been very successful with, and was a founding chairman at another company. He's like, I got no desire to ever want to be a GP, but I love what you're doing. I love working with you. Like, let's figure something else out. And so I do say, while I am a solo GP, it's not a solo fund, and have 2 venture partners, have a fractional CFO that I meet with every single week for the last year and a half now. And so it feels a lot less solo, and I'm kind of getting into this vibe. I like this vibe. So in this version of solo, maybe this is where we stay, but I do like the team aspect of it and winning for a team.
Yeah, massive props to you. It's not an easy feat, so congratulations on everything. Eric?
Yeah, the decision to join S3 was one that was at an interesting time when it wasn't clear that, is venture in Austin going to be a thing, even, because you had Austin Ventures and a bunch of other firms die down, and I wasn't sure from a career standpoint, do I want to do it? I had a short stint in venture right after business school before I did Invoto, but so I knew, I kind of had a background in it, but the question was like, would I go back into it? And I really loved being a CEO and running a team and building teams, and I knew from my past experience, it's really not. I mean, it can sometimes be a team sport, and then other times it's more like a confederation of individuals, or that's what a partnership can be. And so what I really liked about the opportunity at S3 was, one, it felt very much like a team, but it was also going through this really interesting shift where our founding partner Brian, who was kind of the sole decision maker on all checks for years, suddenly was saying no. Where he'd actually kind of promoted someone who had been with him for over 10 years to be another check writer. He was bringing me on board, and there were a couple other people in the wings. And we also were kind of really under the radar, like, because if people don't know, we are a single limited partner. fund. So we have one multi-billion-dollar family that backs us, and that caused a lot of confusion in the marketplace. Are we like a family office? What do we do? Our website was really old, like 10 years old. Like no one really knew what was going on. And so I was excited by the operating opportunity that I had. And actually part of the reason I didn't do a deal for the first 2 years, the first year I was rebuilding the firm. So like we rebranded, we built all these processes. I have all the associates, the talent, marketing, all rolling under me. So I'm like the COO-ish kind of person also. And so I had this feeling of, I'm building something new, and we could see the wins of like our digital presence and just everything, where we went from like where if you listed, what are the top firms in Austin at that point, people wouldn't say the name S3, and now I think you probably would bet they would. And so that's been really fulfilling for me, frankly, even more than investing up to this point, because I haven't had my big exit yet. Honestly, that part is the thing I'm most proud of right now, is the building of the firm and the team that we built around. We've also expanded to where we have a pretty sizable investment team, junior people that we develop, and a whole HR kind of development process for investing, and that's all stuff that I work very closely on. So I found that the most rewarding part of it all.
I love that.
To this day. So it's the builder part of me still.
And I can, without ever hearing that story before, I can back you up. You are being 100% honest, because I've reached out to a lot of VCs in town. I'm doing a lot of events, and every single one of your teammates immediately reply. They're like, "Hey, how's it going? Let's jump on a call. What do you want to talk about?" They've been super, super welcoming, super awesome. So you just kind of made it, real. Like it's intentional. It's something you've done. So I appreciate you, and I appreciate that. And I did a lot of that through cold DMs, which is now going to be more hot fire questions. Cold DM or warm intro?
Warm
intro?
Yeah.
Don't
Warm
do what I
intro.
do.
Yeah. Well, I'll tell you what.
No question.
We are very data driven, and we track everything in our CRM and do all this analysis. And it is probably a 2x higher conversion rate, if you want to call it that, from a referral than our outbound, and then inbound is the lowest.
Yep.
And not because, some of that is quality, but like clearly, good founders know that that's the way to go.
For sure.
Yeah.
That's why we're doubling down on it.
But I did make an investment in a website submission recently that I'm very excited about, and I think Disco was that way too, right?
I was about to say.
So there are exceptions.
I'll play the devil's advocate for a minute,
yeah.
but one of our investments out of Fund 1 is a company called Disco, and it was a company that Live Oak was with from zero through IPO, and that came in through a cold email. So
amazing.
So we still
you
look
can
at
listen
them,
to
right?
us, but
Yeah,
don't
you still
listen
look
to
at
us.
them.
Yeah.
You still look at them, and you never know. And so it's not like we're beyond. It's not below us to look at what comes on the website, but just statistically, that's what happens.
Recap: be really damn good, or get a warm connection.
What was it about that cold intro that was
Yeah, so it's a good question. So the reason it caught our associate's attention and got to me right away was because, and I'm surprised he went about it this way. I think because he's an AI guy, he probably just did this AI bot that went through. That's what I think really happened. But he was the founder of a company that he was a previous founder, and he was partnering up with his former CTO, and that company had gotten to $40 million. I actually knew the company because I'd interviewed his former CRO for another role, because I was on a board with his former investors. And so when I saw the name, I was like, I would have probably seen that. And actually, Zaz here in Austin is an investor in it too. So we would have seen the company, but I'm sure he did this AI thing, and it just came to us faster, right, because of that. And so, it was who he was for us. I don't know about the Disco story or why that's
Yeah, I unfortunately was not boots on the ground at that stage, but great founder, super high IQ guy with good domain knowledge and ahead of his time thinking.
Yeah,
on
didn't
what
he go to
was
like law
building.
school in high school or something?
Yeah,
he was like one of those really unique individuals
He was like
or
the
something.
youngest law school graduate at Harvard ever.
Yeah, something like that. Yeah, so.
That will catch
So I
your
think
attention.
those are like the unique people that can stand out on a cold email. Otherwise, it's easier.
I'll say it again: be really damn good.
Two things on a cold email though. The one thing that does where I would say, like, if you know someone very closely to that person and just reference that person rather than doing the outreach, it's like, hey, I know Jason really well. Or like, hey, I know Ned. Like, if you go 1 degree away from me of someone that I know and say you know that person, that it's going to get responded to and it's probably quicker. I use it all the time too. It's like, hey, I'll say, hey, I could have asked XYZ to do an intro, but I decided just to reach right out, and that's a pretty high hit rate.
And putting my sales hat on, if you just do 10 minutes of research and say, hey, I saw you are an investor in XYZ company and what I'm doing is interesting to you for these reasons, that goes a long way as well.
Yeah. What was the technique you used? I'm like, you were creating that value for them versus I need money, right? Like, you're investing these things and there's an opportunity for you. Like that's a classic, sales sort of
Yeah,
approach.
connect the dots for
Yeah.
people instead of assuming they're going to connect the dots themselves.
Yeah. Instead of, hey, I'm raising 2 million on whatever, it's like, oh, okay, cool. Right on. Most overused word in VC right now. Overused word.
Agentic.
So yeah, it really is. I was going to say agentic, and that's what they call it maybe in this room and in Silicon Valley, but in the rest of the world, it's still just called automation. Yeah, that was a good joke.
Yeah, true. LP you take to lunch. Actually, no, let's do VC. Maybe we don't want to put our
I'll go
LPs
with the
out
LP
there.
because I thought about that, and I went with the person that came to mind immediately, but I was like, wow, are LPs getting out there that we need to know all their names as well? But Lyndall Ekman, he used to be the senior investment manager for Utimco here at UC, and then went to Foundry Group, where he's been a partner at Foundry for the last 9-10 years, and I think they recently announced they're not going to raise another fund, and so he's going off to do his own thing, and just a great human with a ton of experience.
I'll answer the LP question as well. Mine would be Rosa from Wild Basin. She's one of our LPs and also just an incredible investor and awesome person.
I'll go the VC route. I think the older folks in here might know this name. I don't know if the younger ones. Fred Wilson at Union Square Ventures. He doesn't blog much anymore, but he was like the original guy to like blog about VC and really democratize it, I think, for folks. And so that's huge. I think we've maybe all learned a lot from what he did. I don't know if he ever wrote a book. I think it's just all right. No, he hasn't. And I also liked something about that firm because they're in New York before New York was a thing. Now it's huge. And they always kept their fund size a certain size and of 200 something million. And that's kind of analogous maybe to where we are in Austin, like where Austin could be as big as, or the Texas market could be as big as the New York market eventually. And but this discipline around having the right size so you don't kind of ruin things both from a return standpoint and or from a just like how the kinds of things you can do with founders as a senior partner. Because I think as you get bigger, that starts to erode.
Amazing. Great answers, guys. This has been such a blast. I want to give you guys an opportunity just to ask you just some final Q&As, and then I do want to just, number one, help me with the pizza, because I cannot eat all that tonight, and I will. I love to eat. But also let you guys just network for a bit and hang out. We do have to head out by 8:30 at the latest, so feel free to hang around and hang out with all of us. But any Q&A, anything you guys want to dig into or double click, like I mentioned earlier? Just stretching? Yeah.
There's been talk about getting rid of the carried interest tax benefits. What do you guys think about that, and how does it affect your business?
Do we need to stop
I've
the
seen
live
it.
stream?
I'm not going to comment on it. Obviously, personally, not that great. Don't have an opinion on it one way or another from a macro level. Not in details enough to be able to comment on that from that perspective. Yeah, it's a bummer, but not all about me or VCs. So, well, we'll see.
I mean, I will say that it comes up almost every few years. It will be amazing if it does get passed, only because if you look at where the money behind the Trump campaign came from, it's like so VC and PE back. Like it would be like, wow. Like I'd be blown away if that happened, but it could. Personally, I mean, I'm conflicted by it because you could look at it fundamentally as a bonus, and so I get that.
Nice. Good question. Hot question. What do you got?
Tips are free. Tips are tax free. Yeah, it's a big tip. I like that one. That's the loophole. Well, actually, the other thing I've heard is that
2 and 0 and yeah, whatever.
the other thing, I mean, the other commentary I've heard on that is people will just come with other structures. You know, so they'll like people will find other ways around it, and it'll just like everything else. So.
I had a thought. There's a lot of talk about AI agents and how to regulate them. And you mentioned Trump. Maybe that won't happen so fast here. I don't have an opinion. But my question is, what does it look like as far as, is this going to be a concern? Is explainability important? Or
I want to make sure I'm understanding the question is regulation a concern or?
yes, when you invest or build, you care about regulation coming down the line?
Yeah, absolutely. I mean, yeah, you can probably speak to this more because I know you're focused on that. But yeah, I mean, we are, especially in regulated industries, increasingly a lot of the digitization opportunities and startups are in these like industries that were slower to adopt, and so they tend to be more regulated, and so the bar is really high. The customer is actually creating a lot of that demand more than even the government is for yeah. There's concern around whether it's security or predictability or auditability, explainability.
How does that manifest? I'm not sure if I'm being clear, but what's the real impact of that?
Well, so far, and this is not just because of that, but there's a lot. I mean, it's a lot of POCs and tire kicking and limited like full-scale adoption. I don't know if you guys are seeing other things in your portfolio. Let me know, but it's still early days in terms of really big enterprises deploying things very broadly. I mean, there are clearly like user tools that people are using broadly, like a cursor or something like that. But when you talk about like people actually making like fundamental mission critical business decisions in their workflows or the ERP systems or systems of record type things, that is being done in a very slow long evaluation process. And the demand from the customer, I think, the reason I think the hesitancy there is this unknowns around how does it really work, what is it going to mean, how predictable is it going to be. They all want like a human in the loop for that reason, things like that.
How would that implement it practically? I mean, would you run the legacy system side by side with the AI-enabled system to see if you get similar outputs?
What I'm seeing right now is more of this. Like I just was in a meeting with a guy who's doing test automation. So this is even in tests, like in software development. There still isn't this trust that I'm going to allow the agent to do all the testing, right? Automate, like there is. When I talk about the agent, I mean like design the tests, actually design the whole test plan, build the tests, execute them, and then in some cases maybe even try to auto-resolve them. And so that whole like vision, like at least in his telling, when he's saying he's talking to enterprises, they want a human in the loop, and they want to be like approving things still, and so they want a UI for that. And so there is still like this demand for like more traditional SaaS kind of UI and experience like with a human there as a step. Maybe we'll break through that, but I think in a lot of these areas where people are just, I mean, it's a lot at stake and it's very risky, and big enterprises, whether they're regulated or not, they might be willing to allow like marketing copy that a human still at the end of the day has to choose, but they're not going to allow some kind of big ERP change. From it.
Even just like a simple example is test this, right? Like they don't need mirrors, right? I don't need to see the camera if it's on autopilot, but I still need that trust. It's smarter than I am. It's better at driving than I am, that's for sure. Like that's a fact. No, I mean, I'm a really good driver. But it's autopilot is a better driver than humans. It's not going to text. It's not going to get tired, right? But I need those mirrors to feel good about, when I do this on the way home tonight. So.
And I think generally big companies always think of themselves as snowflakes in the sense that, yeah, I would work for this company, but I'm different, right? And that is true in software always. And I just think, so that also speaks to, well, maybe your AI works here, but is it going to work with me and not make mistakes?
Good questions. What else we got?
Good one. It sounds like you've been in the investment world here for a while. see as the quality of the deal flow? Because, there's always been this story about Austin versus the coasts. And with all the West and coastal folks moving to California, moving to Texas here, lots more investment here. Do you see the quality of the deals, especially coming out of UT and the system?
100% improvement. I don't know if it's still like at the levels of some of the other bigger markets, but market improvements. And a lot, I wouldn't say it's like UT. I actually did have an investment in I tried to make an investment in some PhDs at a UT on AI, so there are cool things happening there. But it's really just the talented people moving here, and for the first time, technical talent moving here. So I think historically, when there were people here or moving here, they were like maybe within certain sectors, like e-commerce. There was a lot of e-commerce activity for a long time, and so you had e-commerce talent here, but you didn't have like infrastructure or cyber. There's so much cyber talent now here, and just all this stuff that wasn't here. The actual engineers, right? You can speak to it more, but that is a very big change, which is very exciting.
Yeah.
It's still more B2B based than consumer, right?
Well, that's interesting for me. We're obviously very bullish on Texas. We're exclusively investing in Texas founders, and most of that is still B2B software. But if you look at the big exits that have come out of Austin, it's not B2B SaaS, it's consumer and CPG and a lot of these kind of overlooked areas by traditional investing firms. So I fully agree. There's so much cool talent that's in Austin, in Dallas, in Houston, and moving here as well. I obviously don't have the long context to compare it to, but it's been really surprising to me to see not only exactly as you're saying, people are coming from New York, San Francisco, LA, but also Australia and Ukraine and places all over the world, and picking Texas and Austin specifically to build their businesses.
And the exec talent too.
Yeah.
So that's the other interesting thing that I keep finding. Oh, a VP of this is here, of a company that is in Silicon Valley.
The
And you're like,
CISO of a
yeah,
lot of
CISOs,
really
yeah.
cool
And I'm
companies
like, oh,
are
they're
here.
here in Austin, and I'm like, that's amazing. You wouldn't have known that. So that wasn't a thing either. The other one thing I'd say is diversity, and Capital Factory is such a great. It's kind of like an exemplar of this. If you look at the Capital Factory portfolio, the seed fund, it is it's an index in some ways on Texas. It is like the broadest thing in terms of sectors. It's like what we do in B2B SaaS and healthcare is like this narrow little thing of all the stuff that's happening in Texas. When you include space and defense and robotics and it's just everything.
Following question for this, it's hot. It's for you guys specifically. How much of it actually comes back to the money being deployed in the state of Texas at an earlier stage to enable companies to take those risks, to feel like this is the place to do it? How much do you think that relies on the VC world? Not just you guys, not just you three, but the VC environment as a whole.
I feel like it's a little bit of a chicken and an egg. Like, we all need great founders, and founders need capital, and that's the reason that the ecosystem works so well. And there are great firms that have long histories in Austin. There are also great firms from the coast that are putting a big focus here. And I do think you talk to founders, they can find funding, they can find backing in Austin, in Texas. You don't necessarily have to be building in the Bay to get investment dollars, and that's obviously great, but I don't know that one causes the other, but I do think both are incredibly important to each other.
Selfishly, I want more pre-seed funds like you're doing, and more angels here that are writing checks. The top of the funnel has to be wider than what we do. Right?
I think I saw some hands. Yeah.
We leverage it. So we have a director of talent, and a lot of her database are fractional folks because that's sometimes all that the company can afford at that point in time. but it is a interim concept, right? And so it's not necessarily. I don't think it's a negative. I think it's a nice thing to have in the ecosystem, that, especially on the CFO side for sure. But even sometimes it depends on the founder and where their gaps are, and where they need like another C-level kind of person next to them, I guess. That actually, I would not as much, if I'm being honest, because the founder is that person usually. Now, it could be at a stage of a company where they have a really good, they're struggling with like the product management discipline, because around like prioritization, they have a lot of customers already, and they're trying to like do a little bit more of like the how do I communicate the market needs into the product and be responsive and that stuff. But that still feels, that's also not very early. That's still later. Yeah, I think like my expectation is the founder like is the North Star on that. Yeah.
Yeah, I would agree with that from a product perspective, but from personal experience, having a product executive or an operating executive come in to shore up the product management discipline or expand to multiple product lines, that's been super interesting. I think overall, a fan and bullish on the use of fractional talent, and I think it's becoming more and more realistic, like on the revenue and go-to-market side. I mean, again, it depends on the founder's talent, but I often will recommend a fractional marketing leader or a fractional go-to-market or sales leader in the early days as well. I think it matters. I don't know. There's a lot of context there to do it full time. Which one do you do first? And depends on the founder's background and where their skills are. But some sort of fractional, either in sales and or marketing in the early days, is probably a 90% of the time I'm recommending these days. So yeah, definitely big on it.
Awesome, guys. Any other questions? Anything you guys want to dig into? Nick, yeah.
Question. So, and this is a question about decision making. So, I'm curious, how long does it take you to know that, let's say, a deal comes in, for you to vet it and say, hey, I do want to invest in this deal. I'll be serious about writing the memo and then send it to my partners. How long does that normally take? And does that shrink over time once you become more experienced? Like, what does that look like?
I'm interested in these guys' responses.
Yeah, I think for us, at least from what I've seen so far, it kind of depends on the industry. Like there are industries that we're more familiar with and might be able to get up to speed quicker, more comfortably. And so those deals can happen very quickly. We also probably know the right people to connect them to for vetting on the diligence side and things like that. There are some industries where it's just brand new, and that happens for me more than it happens for our partners, and those require a little bit more time and effort in terms of sitting down and getting comfortable with the market size and who you pull in to vet this idea and this approach. And then a lot of it too can come from the founder specifically as well, like how quickly do they need to move? A lot of the times we're reacting to that, and if a founder has a specific timeline, that's important to us, and we obviously do whatever we can to work alongside that.
Yeah, agree with all that. The familiarity, the stage also matters. Like, so if you're super early, I'm kind of just evaluating you, and like, I mean, it's a pretty easy. It can be done faster. Though face-to-face is nice. I mean, we did a few deals during COVID where we didn't meet people in person, and that kind of worked, but not ideal. But if it's a later stage deal and there's a lot of data that needs to be gone through, a big factor can be just how well presented is that information. Are you making us work for the answers, or are you giving us the answers out of the box? So that can influence things as well. And a lot of it is just being like running the process as a founder. Some founders are really adept at creating a sense of urgency, but not over the top where I'm going to be like, oh, that's too fast. I can't do that. But and so sometimes I always wonder, like, am I falling for some kind of salesmanship? But there's some people who are just good at it.
And I noticed your second point about the urgency. So like I've invested in a few deals
Yeah.
part time, and sometimes they can be pushy to the point of, hey, you got to sign this, you got to here's the account information. my due diligence first, but it's like, it's kind of rushed. It's just like, that's a signal, right? Or, again, this is me doing my due diligence, but if a co-founder, mishap or relationship happened in the past or something, it's just like, know the red flags, like,
Yeah.
be better at picking those up.
Totally. And I think I'd err on not just because I'm on the other side, but I think it's at the end of the day, it's dating, and you want to work with that person, and you want the time to be able to get to know me really well and not make a rush decision about who you're partnering with either. And I don't know if it was COVID or if it was the Y Combinator leadership and training, but there was a period of time where I felt like every YC company was creating this fake urgency in a way that was just destructive and really bad. And so, my advice is don't do that.
Amazing, guys. Well, thanks so much. Please help me give me a round of applause, Catherine, Nick, Eric. Thank you so much for being awesome, providing all this awesome knowledge and experiences to the group. Missing out for a little bit. If you guys have any more questions, now we do it off the mic. But help me with the pizza, like I said. And thank you all for being here. It really means a lot. Thank you. Yeah, thank you, guys.
Hotel.
all about house music. It's all about love. It's all about house music. It's all about love. It's all about house music. It's all about love. It's all about house music. It's all about love. Dance with you. Oh, nah. Baby, wanna dance with you. Oh, it's all about house music. It's all about love. Dance with you. Oh, nah. Baby, wanna dance with you. Oh, nah. I've been here for days, trying to wash away the pain. Look at what you've done, don't ever be the same. So tell me where to go, I'll be there before you even know. You treat me right, I won't leave you alone. You can take all my cologne. So tell me where to go, I'll be there before you even know. You treat me right, I won't leave you. You can take all my cologne. We can move like this. We can move like this.
All the little things we can't forget, and we haven't found a way out yet. We got to get there somehow. 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 Got to get there somehow. We got to get there somehow. Got to get there somehow. We got to get there
I could go down, keep it rising. You could go down, keep it rising. I could go down, keep it rising. I said you could go down, keep it rising. I could go down, keep it rising. You should go down, keep it rising. I could go down, 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 keep it rising. You should go down, keep it rising. I could go down, keep it rising. You should go down, keep it rising. I could go down, 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 keep it rising. I could go down, keep it riding. You should go down, keep it riding. We could go down, keep it riding. She said, boy, don't say my number. Driving 100 miles an hour. She put her intentions on my tongue. I taste it. Rolling through. Can you feel it racing? I could go down, keep it rising. You should go down, keep it rising. I could go down, 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 keep it rising. You should go down, keep it rising. I could go down, keep it rising. You should go down, keep it rising. We can go down, keep it riding. Come move, we're already vibrating. Let's go. Let's keep rising all night. Let's keep it rising. Keep it rising. I wanna keep it rising. Exhale. Let it take you under. Floating.